Welcome to 2025, and welcome to your financial future. If you've ever thought investing was too complicated or just for the super rich, this is your year to change that. Investing is simply making your money work for you, planting a small seed today for a bigger tomorrow. The world of finance might seem intimidating, but at its core, it's about buying a piece of something you believe will grow. As it grows, so does your money. 2025 is an exciting time for new investors, with big shifts in technology and business. Artificial intelligence is now an everyday reality, creating huge opportunities. Interest rates are changing, affecting everything from savings to stocks. You don't need a fortune to start, just a few dollars and the willingness to begin. The power of compounding means your earnings can generate their own earnings, growing faster over time. Time is your greatest asset as an investor. By watching this, you're already taking the first step. We'll break down the big trends from what's hot in the US and Europe to themes like AI and digital infrastructure. We'll also cover why diversification matters. By the end, you'll have a clear roadmap and the confidence to start your investing journey. Let's make 2025 the year you take control of your financial destiny. It's easier than you think. Let's get started. Global markets might sound overwhelming, but think of them as a giant shopping mall with different regions. The US, Europe, and Asia are the biggest sections, each with unique opportunities. The US is the bustling main entrance. Most of the action happens here. Europe is more classic and reliable, with some new opportunities emerging. Japan is making a comeback, and India is showing huge long-term growth potential. Where you invest matters. Different economies grow at different speeds. A strong US economy helps American companies thrive, boosting their stock prices. Knowing which regions are doing well lets you position your investments for growth. In 2025, have a solid footing in the US market, but keep an eye on other regions. Don't just focus on your own backyard. The world is more connected than ever. Trends can spread quickly from one country to another. Thinking globally gives you more options and a more resilient portfolio. Start small, but think big. The US stock market remains the world's champion, home to giants like Apple, Google, and Amazon. In 2025, big investment firms are still bullish on US stocks. The Federal Reserve has cut interest rates, making it cheaper for companies to grow and making stocks more attractive. This is especially good for tech and growth companies. The AI boom is fueling massive investment and strong earnings, driving stock prices higher. American consumers are still spending, keeping the economy healthy. The job market is cooling just enough to avoid recession, creating a stable environment for growth. For beginners, this means a simple, low-cost fund tracking the US market, like an S&P 500 ETF, is a great way to start. You're betting on the continued success of America's top companies. No investment is guaranteed, but the US market offers a compelling mix of stability and growth. It's still the safest bet among major world markets. Start with the US. Den stum diversify as you learn. The US remains the star of the show. Don't overthink it. Sometimes the simplest approach is the best. Get started and grow with the market. The US gets the headlines, but Europe offers hidden opportunities. Europe isn't growing as fast, but selective investors are finding value. Think of it as treasure hunting. There are gems if you know where to look. Pro-growth policies and greater unity are creating new opportunities in sectors like finance and defense. Infrastructure is a key area, modernizing transport, energy, and more. Some European real estate markets are also showing strong, reliable returns. For beginners, consider a broad European ETF for diversification. This gives you exposure to hundreds of companies, from LVMH to Nestlé. Europe may not be the fastest, but it offers stability and access to different industries. Diversifying globally helps balance risk and capture growth. Don't ignore Europe. It's a smart way to round out your portfolio. Sometimes the quietest markets have the best surprises. In 2025, artificial intelligence is the hottest investment theme. AI is no longer just a buzzword, it's a revolution, driving massive growth, especially in the US. Companies are pouring trillions into AI, creating huge opportunities. Nvidia, the chipmaker powering AI, has seen its stock soar over 1,200% in 5 years. The rise of AI feels like the early days of the internet, a once-in-a-generation chance. For beginners, the easiest way to invest in AI is through a thematic ETF. A thematic ETF groups together companies working on a specific trend like AI or robotics. By buying one share, you get exposure to dozens of AI-focused companies. It's a simple way to bet on big trends without picking individual stocks. Thematic ETFs make it easy to align your investments with your interests. If you believe in AI's future, a thematic ETF is a direct, accessible way to invest. Just remember, even the biggest waves can have ups and downs. Ride the trend, but stay smart. AI is exciting, but don't put all your money into the hottest trend. Popular themes often have hype already priced in, making stocks expensive and risky. Many groundbreaking AI companies like OpenAI aren't even public yet. You can invest in suppliers, but not always the innovators themselves. That's why diversification is crucial. Don't put all your eggs in one basket. If AI stocks stumble, a diversified portfolio protects you. Even thematic ETFs can overlap, holding the same big tech stocks. Check what's inside your funds to avoid false diversification. Build a mix of themes, sectors, and regions. AI can be part of your plan, but not the whole plan. Diversification smooths out the ride and reduces stress. Stay balanced, and you'll weather any storm. Smart investing is about more than chasing trends. AI needs a massive physical foundation, digital infrastructure. Every online action relies on data centers, cell towers, and fiber optic cables. As the world goes digital, demand for this infrastructure is exploding. In the US, data center construction is growing 25% a year. Electricity demand is set to rise dramatically, driven by AI and clean energy. This creates huge investment opportunities beyond typical tech stocks. You can invest in companies building data centers, owning cell towers, or powering the grid. Renewable energy and battery storage are also key growth areas. These are the picks and shovels of the digital gold rush. Infrastructure investments are tied to real, essential needs, often more stable than flashy tech stocks. ETFs focused on infrastructure or clean energy make it easy to get started. By investing in the digital foundation, you're betting on a trend that's here to stay. Sometimes, the best opportunities are behind the scenes. Investing isn't just about stocks. Alternatives like private equity and real estate offer new opportunities. Private equity means investing in companies not listed on public exchanges. With lower interest rates, private equity deals are picking up, offering attractive long-term returns. While direct investment is tough, you can buy shares in companies that manage private equity funds. Real estate is more familiar. There's a big opportunity in U.S. housing due to a shortage of homes. Multifamily, senior, and workforce housing are especially promising. Some real estate investments are projected to return over 10% annually. The easiest way to invest is through a REIT, a company that owns income-producing real estate. REITs let you earn real estate profits without being a landlord. For private equity, specialized funds and ETFs are becoming available. Adding alternatives can boost your portfolio's growth and stability. Don't overlook these powerful drivers of wealth. Diversify beyond stocks for a stronger financial future. We've covered a lot, but starting is simpler than it seems. Your main goal is to build a solid foundation and consistent habit. Time is your greatest ally. Start now, even with a small amount. Don't let fear hold you back. The biggest mistake is not starting. Open a brokerage account. There are plenty of easy, low-cost options. Begin with a broad market, low-cost index fund or ETF, like one tracking the S&P 500. This gives you instant diversification and exposure to America's top companies. Once you have your core holding, explore themes like clean energy or digital infrastructure with a small portion of your portfolio. Keep your core broad and stable. Use smaller investments for higher growth. Always check what's inside your ETFs to avoid overlap. Be patient and consistent. Don't panic during market swings. Set up automatic monthly contributions, even if it's just $50. Dollar cost averaging takes the emotion out of investing. Stay curious, stay diversified, and keep investing for the long run. That's the proven path to building wealth.